Well, hey there. It's Thursday, so that means it's time for 3 Minute Thursdays. I'm Terry Sawchuk with Sawchuk Wealth. Just a quick market update. Yesterday, the FOMC meeting took place. They decided not to change interest rates, and I think that may not have been the correct move. The reality is they're probably going to start cutting in September. The markets are selling off a little bit today. They were up yesterday, but they're down today by roughly the same amount that they were up yesterday. And I think we're getting to the point where the economy is starting to slow down enough to where the markets are getting a little jittery. The AI boom, I think, is probably, at least on a short-term basis, over for now. I think the AI stocks have gotten way ahead of themselves. And, you know, the technology is great when you think about what AI can do. Like, I go to ChatGPT all the time, right? So if I have a question, if I want to learn something, if I want to fix my sink, I can go to ChatGPT and I can get those answers, okay? But ChatGPT charges me $20 a month. So the reality is, you know, outside of OpenAI, right now, what is happening in the industry is a lot of companies are finding out that while it's a cool novelty and there are maybe some minimal productivity gains that are happening, they're not able to do it at scale. And these companies have invested, you know, the estimates are like $500-600 billion into the equipment to run AI, you know, applications and so forth. And so I think what's probably going to happen is you're going to have a shakeout. The prices got kind of ridiculous, and they're going to have to come back down as these companies realize that the investment they made isn't going to immediately add to the bottom line like some wonder drug that everyone thought it would be. And, you know, long term, you know, by 2030, I've seen estimates that, you know, something like 30% of the workforce could be replaced by AI applications that are increasing productivity. But, you know, we're talking about more than 5 years away. So I think the NASDAQ is susceptible to a bigger drawdown here. Now, I do think the Fed's going to come to the rescue. I think at some point, you know, obviously in September, they're going to cut rates, and it might even be a 0.5% cut. And I think they would have been better off cutting 25 basis points in July and then maybe follow up with another 25 basis points in September and just kept the commentary a little bit more even keel. Now, if you get a 50 basis point rate cut in September, it's going to look like a little bit of a panic reaction. We all know the economy is slowing down. It's just by a matter of how much. And, you know, the economy is actually in decent shape. Even though it's decelerating, it's still, you know, pretty good. So, you know, I would expect some volatility in the short term. I think the NASDAQ's got more downside. The S&P's probably going to have a little bit more downside also. The Russell, you know, the Russell 2000 is the best value in the equity indices right now. And so we're looking to deploy capital out of the NASDAQ into the Russell, and we'll continue to do so. So that's going to wrap up this week's edition of 3 Minute Thursday. I look forward to seeing you guys next week, same time, right here.